Welcome to the deep dive. Lately, it really feels like our paychecks just aren't stretching as far, doesn't it?
Mhm.
And that feeling of inflation kind of nibbling away at your savings,
Mhm.
it's definitely hard to ignore.
Yeah, it really is.
So in this session, we thought we'd unpack some potential ways to maybe shield your financial well-being a bit.
That's right. The erosion of purchasing power, it's a huge concern for so many people right now. So today, we're putting gold and silver under the microscope.
Okay.
Our goal is basically to explore their historical track record and, their potential as hedges against this inflation we're talking about.
Right.
And we're drawing insights from a really detailed article that kind of walks through the ins and outs of investing in these metals.
Okay, so gold and silver. When people start thinking about protecting themselves from inflation, these two almost always pop up first.
Mm.
Why is that? What's really at the core of their lasting appeal?
Well, fundamentally, it really boils down to their history as tangible forms of wealth.
Tangible.
For centuries, long before we had all this paper currency, gold and silver were the money.
Right.
Their value comes from their scarcity. I mean, unlike government money, which can be printed, the supply of gold and silver is just, well, it's limited by nature.
Mm-hmm.
And that basic fact has made them pretty reliable stores of value through all sorts of economic shifts and, societal changes over the years.
You often hear that gold holds its value even when things get really chaotic. Is there a good example of that?
Oh, absolutely. The article we looked at brings up the hyperinflation in Zimbabwe back in the late 2000s.
Oh, wow.
I mean, imagine your local currency becoming basically worthless almost overnight.
Right.
In that kind of situation, someone holding physical gold would have seen their wealth preserved. Totally different story for people holding Zimbabwean dollars.
Must have been devastating.
Oh, completely.
Yeah.
A tiny bit of gold could still buy you essentials when the actual currency was useless. That difference really highlights gold's role as a sort of financial anchor in extreme situations.
So gold is like this bedrock. When everything else feels like it's shaking, it's sort of the financial world's emergency brake.
That's a good way to put it, yeah. It acts as what economists call a safe haven asset, particularly during economic downturns.
Okay.
When stock markets are plummeting or currencies are losing value, investors tend to rush towards the perceived safety of gold.
Uh-huh.
And that increased demand can help its price hold up or even, rise.
Yeah.
Think back to the 2008 financial crisis.
Yeah, remember that?
Global markets were in free fall, right? But gold prices actually surged. It showed its ability to weather those storms.
Right.
And it's not just individuals either. Central banks all over the world hold massive gold reserves.
That's true. Why do they do that?
Well, it's not just tradition, it's strategic. It
Right.
adds stability to their national economies. The sheer amount they hold is, it's really a testament to gold's enduring importance.
Okay, that makes gold's role pretty clear. Now, silver often gets mentioned right alongside gold. Does it work the same way as an inflation hedge?
Silver shares some of gold's basic qualities, yeah. Mainly the limited supply and that historical status as, a store of value.
Okay.
But it also has some key differences. Its role is maybe a bit more nuanced.
How so?
Well, one big advantage is just the price. Silver is way more affordable than gold, which makes it accessible to more people, Investors who might find buying gold requires too much capital up front.
That makes sense. Yeah, for someone starting out or maybe with less cash to invest, silver feels like an easier entry point.
Exactly. And another thing, silver has tons of industrial uses.
Oh, like what?
It's crucial in electronics, solar panels, all sorts of things. This industrial demand can be a really significant driver of its price. It adds this whole other layer of potential value beyond just being, money. Gold doesn't really have that same level of industrial demand affecting its price.
So silver has this kind of dual appeal then, score of value and an industrial metal. Does that make it a better investment overall?
Not necessarily better, just different. That industrial demand, combined with, market moods, also makes silver's price more volatile than gold's.
Oh, okay. More volatile.
Yeah, much bigger price swings. So while that could mean bigger percentage gains if the market goes up.
It also means bigger potential losses if it goes down.
Exactly, higher risk. So just to recap quickly, both have value because they're scarce. Gold is the classic safe haven in rough times. Silver has that industrial kicker, but it's a bumpier ride price-wise.
Got it. Okay, so let's say someone listening is thinking, all right, maybe I should add some gold or silver to hedge against inflation. How do they actually do it? It's
Well,
not like ordering groceries, right?
not quite. Although, well, you can actually buy physical bullion. That means actual coins and bars.
Okay, physical metal.
Yeah, and that's the most direct way to own it. For some people, actually holding the gold or silver, that tangible aspect, gives them a real sense of security, especially when the economy feels shaky.
I can definitely see the psychological comfort in that. But what about the practical side? Storing it. That must be tricky.
You've hit a really important point there, storage and security. I
Yeah.
mean, keeping a lot of gold or silver at home, that brings up worries about theft or even damage.
Sure.
So a lot of people use secure vaults, maybe at a bank or these specialized storage facilities. But of course, those have fees.
Right. Nothing's free.
And also, when you buy and sell the physical stuff, you usually pay what's called a dealer premium.
Premium.
Yeah, it covers the dealer's cost of getting and handling the metal. Plus, you might have shipping costs, insurance. It adds up.
Okay, so definitely some logistics and extra costs with physical ownership.
Mm.
Are there other ways to get exposure to gold and silver without actually having bars under your bed?
Oh, yeah, absolutely. A very popular way is through ETFs, exchange-traded funds, or mutual funds that basically track the price of gold or silver.
ETFs, right? I've heard of those.
So when you invest in these, you're buying shares in a fund. That fund either holds the physical metal itself, or it uses financial instruments derivatives to mirror the price. But you don't own the actual coins or bars yourself.
Okay, that sounds way easier from a storage point of view. What are the main upsides and downsides there?
The big advantage is liquidity. It's super easy to buy and sell shares in these funds through your normal brokerage account.
Right.
Much simpler if you want to adjust your position quickly. But the downside is these funds have management fees.
Ongoing costs?
Yeah, they chip away at your returns over time. And also, because you don't physically hold the metal, you have what's called counterparty risk.
Counterparty risk, what's that?
It basically means you're relying on the company managing the fund. If that financial institution ran into serious trouble, well, it could potentially affect your investment.
Gotcha. So you're trusting the fund manager to do their job and stay afloat. Okay, what was the third way the article mentioned?
The third route is investing in stocks of mining companies, companies that actually dig gold and silver out of the ground.
The miners themselves.
Exactly. The thinking here is if gold and silver prices go up, these companies should become more profitable, right? And their stock prices might rise too.
So an indirect play on the metal prices.
Pretty much. But, and this is a big but, it's crucial to understand their stocks are affected by way more than just metal prices.
Like what?
Oh, all sorts of things. How much it costs them to operate, how good their management team is, geological surprises in their mind.
Political issues too, maybe.
Definitely. Political instability in the countries where they operate can be a huge factor. So their stock price might move quite differently from the actual gold or silver price sometimes. You really need to research the specific companies.
Okay, so multiple ways to invest. Physical, ETFs, mining stocks,
Mm-hmm.
each with its own pluses and minuses. Now, we've talked a lot about them being inflation hedges, but what about the risks? Are there inherent dangers we need to keep in mind?
Absolutely. No investment is risk-free, and gold and silver are no exception. One of the biggest risks is just market volatility.
Or those price swings you mentioned with silver.
Exactly. But gold can be volatile too, just usually less so than silver. Prices for both can fluctuate quite a bit. Depends on global supply, demand, big geopolitical events, even just investor mood.
So the price isn't guaranteed to go up just because inflation is high. It can still drop.
Oh, absolutely. There can be big swings both ways. Now, that volatility can be an opportunity if you're trying to trade short term.
But that sounds risky.
It is. It's challenging. It also means you could face losses, especially if you need the money quickly or you try to time the market perfectly. The article makes a good point. A long-term view often helps navigate these ups and downs.
And diversification, I imagine.
Crucial. Absolutely crucial. Spreading your investments across different types of assets helps cushion the blow if one part of your portfolio takes a hit.
We also touched on the risks with physical storage. Anything else on that front?
Yeah, well, beyond theft or damage at home, there's also liquidity. Selling physical bars or coins might not be instant, like selling an ETF share.
Right, finding a buyer agreeing on a price.
Exactly.
Yeah.
And you might face extra costs when you sell, depending on the dealer. And while professional storage is secure, like we said, it's an ongoing expense that eats into your potential profit.
Okay. And what about just compare the cost generally between physical ETFs, stocks?
Mm-hmm.
they differ a lot.
They definitely do. Physical has those upfront dealer premiums, maybe shipping, then potentially ongoing storage fees.
Mm-hmm.
ETFs and mutual funds, they have those recurring management fees, plus maybe brokerage commissions when you buy or sell shares. Mining stocks have brokerage commissions too.
So you need to factor those in.
You really do. You need to compare the costs for each option and think about how they fit with your overall plan and how long you expect to hold the investment. You don't want fees eating up all your gains.
Makes sense. So thinking strategically then, how should someone actually incorporate gold or silver into their portfolio? Is there like a rule of thumb percentage?
That's a really key question, and yeah, the source material does touch on that. A common guideline you often hear from financial advisors is maybe think about allocating somewhere around, say, 5% to 10% of your total investment portfolio to gold and silver.
5 to 10%.
Yeah, that level can act as a potential inflation hedge and add some diversification, hopefully without dragging down the growth potential from your other assets like stocks too much.
So it's about balance, not putting all your eggs in the precious metals basket.
Exactly. It's all about diversification. Stocks, bonds, maybe real estate. Gold and silver should just be one piece of a broader, balanced strategy.
Right.
And it's not something you just set and forget either. You should regularly review your whole portfolio, see how things are performing, and rebalance your allocations if needed. Market conditions change, your goals might change.
Okay. And what about your investment time frame? Does that affect how you should view gold and silver, long-term versus short-term?
Oh, definitely plays a big role.
Right.
For long-term investors, gold and silver can potentially act as that reliable store of value we talked about,
Yeah.
protecting wealth against inflation, eroding its power over,
Right.
decades.
So patience is key.
Patience helps ride out those price swings, for sure. Now, short-term investors, they might try to trade the fluctuations, try to buy low and sell high quickly.
For the higher risk strategy.
Generally, yes. More speculative, needs a really good understanding of the market. So aligning your investment horizon with your financial goals is just, well, it's essential.
The article also mentioned putting gold and silver in your retirement fund. How does that actually work?
Yeah, it brings up the idea of a gold IRA.
Gold IRA.
So unlike a typical IRA, which usually holds stocks, bonds, mutual funds, that kind of thing, a gold IRA lets you hold physical precious metals, actual gold or silver bullion inside your retirement account.
Wow. Okay. Physical metal in your retirement account.
Yeah. Our source material actually points to a couple of other articles specifically on this. What is a gold IRA and how does it work and how do you start a gold IRA?
Yeah.
They go into the details like how you might transfer or roll over funds from an existing retirement account.
Interesting.
So it's another potential way to use gold and silver for inflation hedging, specifically for your long-term retirement planning.
That's definitely a different angle for retirement savings.
Mhm.
Well, this has been incredibly insightful, a real deep dive into gold and silver as potential inflation hedges. Any sort of final takeaways for our listeners as they chew on all this?
Sure. I guess the main summary is that gold and silver, they have this long history as stores of value. They can be useful tools for potentially protecting your wealth against inflation's bite.
Right.
You've got different ways to invest, holding the physical metal, using ETFs for convenience, or investing in mining stocks. Each has its pros, its cons, its risks.
Uh-huh.
The really crucial thing is to understand these options. Think hard about your own financial goals, how much risk you're comfortable taking, and then strategically fit precious metals, if you choose to, into a well-diversified overall portfolio. Don't go all in.
Good advice.
And, the article does mention some analysts are pretty optimistic about gold prices for 2025 and predict a possible surge for silver, too. Now, obviously, those are just predictions, right? No guarantees.
Of course. Crystal balls are always fuzzy.
Exactly. But it shows there's ongoing interest. So maybe the final thought for you, the listener, is to consider what role, if any, these metals might play in your long-term plan. And maybe, if retirement saving is top of mind, looking into something like a gold IRA might be worth exploring further. The author of the article we used, Doug Young, he's got a lot of experience in this area, so it's a credible perspective to consider.
Definitely a lot for everyone to think about. Thanks so much for breaking all that down for us. It's been really helpful.